Coleman's Small Business Banker Weekly Radio Show with your host Bob Coleman is brought to you by GovGex.com, the online exchange for sellers of SBA and USDA loans, and PCFS 2000, the leading financial technology services vendor providing software solutions to both the SBA lending and credit union industries.
Bob, I have a question for you. Can you expand upon your requirements and what you're looking for on cash reserves, working capital reserves, and how that's changed over the last couple of years?
Well, sure. As I said, I've always been a pretty conservative underwriter. But, you know, we still do in certain concepts, and again, concepts that I have a lot of portfolio history with. Okay? We will still do an 80% loan to value on a startup. Now, one of the things I don't get involved in, I don't get involved in lending working capital. I try to stay away from that. Or I only include the amount of working capital that's prescribed by the franchisor and the FDD. The reason is, if you've ever looked at sources of use of funds, the most arbitrary number that you're ever going to see is working capital. Okay? You know, the franchisor says I need $15,000 in working capital, but on your sources and uses there's $89,000. Well, why is that? Well, because I'm quitting my job and I need to pay my bills. Well, I'm not lending you your salary from last year. Okay, that's not the idea here. You're going into business, tighten your belt, sell something, sell the boat, you know, okay, sell the house on the lake, whatever, if you want to go into business. So we now require 700 FICO score. We used to get down to like 650. And if you understand, I make extensive use of credit scoring. We were an early adapter of credit scoring going back to 1994. We wrote one of the first interfaces to SPSS Credit Desk. And if you understand credit scoring, you have what's called a gray area in the middle. That gray area used to be like this. So it would be like 625 to 675 was the gray area. That gray area is now right here. If you're an established franchisee and maybe you had a delinquency a couple of years ago and your score is 680, you're in the gray area. Because you have financial statements, you're an experienced franchisee, you're opening your third location, that's probably going to get approved. If you're a startup and you're below 700, you can't even bring the deal in. There is no market for it. And I will tell you, startups, my average startup guy, franchisee is probably, I'm going to say average is a 730 FICO. There's method to that madness, however. The people that are scoring on a startup basis at 650 or 640 probably don't have the requisite cash and everything else to get involved to buy the franchise anyway. So that's somebody that you should be eliminating at your level before it even gets to a lender. Because that all, the people you deliver for the lender to look at goes to the credibility of the franchise and your qualification process. That means a lot. Right? And what other qualifications like 80%, I still do 80% loan to value. We'll drop to 70 on some startups now. 50% loan to value. I did one the other day. I was actually surprised that I was able to sell. I like the transaction. I had it on my warehouse line. I was surprised that I was able to sell it into the secondary market. I had approved it for 50% loan to value. It was a applicant in the Phoenix area who had extensive experience with a large restaurant group, but had quit his job, but had substantial cash. And I just looked at this, great credit, had handled his credit perfectly, and I just looked at that as a transaction that should get done. So I was willing to take a flyer on that. I got the store open. We got the store open. We got a first quarter, first 4 or 5 months of financial statements, and I thought, let me see if I can sell this. And, I'll probably get slapped if I do, but but approved. It was bought in a portfolio that I sold, and I was surprised at that. So, you start to see these, like what they call green shoots. You start to see them here and there. But I think on a startup basis for somebody, unless they have very extensive experience and a lot of cash, it's going to be real hard to sell them as a startup without a job or without outside family income. That's a big thing right now.